Welcome to this presentation by Zeno Analytics. For more information, please visit zenoanalytics.com. My name is Jaap Vink, and today I want to present a descriptive trend analysis of fuel prices at pump in the Netherlands. I will present some trends in components that make up the price that consumers pay for their fuel. I will be focusing on the prices for Euro 95, which is unleaded petrol with octane number 95, and diesel in the period starting January 1, 2006 and ending February 13, 2023. In this chart, you see the prices at the pump for Euro 95 and diesel in that period. And as you can see, in 2006, Euro 95 started at around €1.50. It steadily increased, and in 2022, it peaked at €2.36. Diesel went from €1 to a peak of €2.25 in 2022. The gap that existed between diesel and Euro 95 closed, and on some days diesel was more expensive than Euro 95. For car owners driving with diesel, this was a big shock because they lost the advantage of lower fuel prices that compensated their higher road tax. Before I start, a short disclaimer. The numbers I'm about to show are rough approximations to identify patterns. The data on prices, for example, at the pump are averages over the whole of the Netherlands, and the data of the crude oil prices are dollars per barrel and needed to be converted to euro per liter using reference exchange rates. I'm also not a fuel and oil expert, so please feel free to comment. The trend lines that are displayed in this presentation are not for forecasting. They are using a method that displays a simplified pattern based on the available data. They cannot be extrapolated to the future. For those of you interested to review what I've done and maybe improve on it, the Python code for collecting the data and any additional files I created are available at GitHub, or you can email info@zenoanalytics.com and I'll send you the files. The sources that I've used are the Dutch Central Bureau of Statistics, CBS, for the fuel prices at the pump, which is a series of average daily prices at the pump in the Netherlands, and for excise amounts pre-2011. The excise amounts for 2011 and later I got from the Dutch Tax Authority. The European Central Bank provided the dollar-euro reference exchange rates, and finally the European Brent oil daily prices I got from the US Energy Information Administration. To understand the fuel price in the Netherlands, you need to have an idea of the components that build up this price. It all starts with the price of crude oil. This price is determined by the markets. I have used the Euro Brent daily price as an approximation. The gross margin is the margin that oil companies put on top of the crude oil price. This is not a profit margin because it also needs to cover all costs to get the oil to the pump, including refinery, logistics, and, for example, the gas stations, next to the profit of the oil companies. Then we get to the taxation of fuel in the Netherlands. First, there is an excise on each liter of fuel. It's a fixed amount per liter. This amount is usually set annually on the 1st of January, although sometimes it can change during the year. For example, in April 2022, it was lowered to compensate for the rising prices at the pump. Normally, it is increased on January 1st of each year, and it is therefore a contributing factor to the steady rise in fuel price at the pump. On top of all that, there is value-added tax, VAT. The VAT in the Netherlands was 19% before 2012 and 21% since. This tax is a linear increase of the price based on the underlying components. Except when the tax VAT is changed, like in 2012, it has no direct influence on the trend. It only increases the final price the consumers pay at the pump. To reduce the influence of the taxation, I calculated the net price per liter as the price excluding VAT minus the excise amount. The price excluding VAT was calculated by dividing the price by 1 plus the VAT rate. So for years after 2012, this was 1 plus 0.21 or 1.21. The gross margin is a reflection of the pricing strategy of the oil companies. Like I said before, this is not a profit margin, but it is the margin on top of the price of crude oil. It is calculated by deducting the oil price from the net price. The oil price was calculated first by calculating the oil price per liter in dollars by taking the market price per barrel and dividing it by the number of liters in a barrel. And this price in dollars was then converted to euro per liter by using the dollar-euro reference exchange rates. Before I show the charts, let me summarize some of the patterns that I saw in the oil prices. The price of European Brent was reasonably stable until the pandemic hit. It fluctuated around 40 euro cents per liter. At the beginning of the COVID-19 pandemic in the Netherlands, however, it took a dive to the lowest level since 2016 at less than 10 euro cents per liter. In 2021, it recovered and reached pre-pandemic levels. It then started rising even before the building international tension because of the threat of Russia invading the Ukraine for a second time after the 2014 invasion. The second Russian invasion of Ukraine was an accelerator, and the price peaked just after the invasion started. Since June 2020, it seems to be going down again. Let's take a look at the data. The yellow line represents the Euro Brent per liter price in euros. You can see that before 2020 it fluctuates around 40 euro cents, with peaks at a maximum around 60 euro cents and a minimum around 15 euro cents. We can also see that the net price of both diesel and Euro 95 follow the same pattern, be it with a delay. In 2020, we suddenly see a dip to below 10 euro cents per liter at the beginning of the pandemic. The net price is not adjusted in the same way as it was before. We will address this further when we discuss the gross margin. From 2020 on, we see the explosion of the oil price to peaks over 75 euro cents, a 25% plus increase over the previous maximum. This is a chart of the daily crude oil prices for 2020 to early 2023. COVID-19 started in the Netherlands end of February 2020 and the last regulations were cancelled end of March 2022. In November 2021, the international tension around possible Russian invasion of the Ukraine increased. End of February 2022, Russia invaded Ukraine for a second time. And then we can see the dip of the oil price at the beginning of COVID-19 in the Netherlands, and pre-invasion tension really started to drive up the oil price, and that exploded then after Russia invaded the Ukraine. After June 2022, it seems to settle down at a lower level. However, we can clearly see that during 2021, the price of crude oil already was steadily increasing. When we look at the patterns of the gross margins, an approximation of the pricing strategy of the oil companies, we can see three different periods. Before 2020, oil companies compensated fluctuations in the oil price. They would increase their margins at a slower rate than a rise in oil price and accepting a lower margin at the start of the increase. They would increase their margin by delaying a drop in the net price after a drop in the oil price. Overall, in the period of 2006 to 2022, they increased their margin gradually, rising slowly to around 20 euro cents per liter for Euro 95 and 30 euro cents per liter for diesel. This slow increase added to the continuous increase of the price at the pump. In 2020, we see a break in the strategy after the start of COVID-19. At the beginning of the pandemic, the oil price took a dive while the net price was kept almost stable. This led to a large margin increase, both in euros and in percentage. In June 2020, at the end of the first lockdown in the Netherlands, the margins returned to pre-pandemic levels. After 2020, the gross margin started to increase rapidly, adding to the price at the pump. It started following the crude oil price. The monthly average peaked for Euro 95 at 56 euro cents per liter in June 2022. For diesel, it peaked in October 2022 at 70 cents per liter, more than doubling their previous levels. Noticeable is that the oil companies did not compensate like they did in the past. This led to an increase in computer price index late in 2021. Here we see a chart with the gross margin, both the euro amount and the percentage of the net price versus the Brent price from 2006 to 2023. In the period before 2020, we can see that the oil companies kept their gross margin in euros reasonably stable. That meant a lot of fluctuations in their percentage margin, but we can see from the percentage that they would delay dropping their margin after a decrease in oil price. In 2020, we suddenly see a peak in the percentage margin. This is at the beginning of the COVID-19 pandemic. It is caused by the crude oil price dropping, while at the same time the oil companies increase their margin by not decreasing the net price. After 2020, we see a sudden change in the pattern. We will revisit this in later slides. This is a chart of the gross margin expressed as a percentage of the net price, the monthly averages from 2006 to 2023. We see a strange peak in 2008. This was caused by the 2008 oil price bubble. Again, we see a peak at the beginning of the COVID-19 pandemic. And suddenly in 2022, we see that the margins for diesel and euro start to diverge. We will go into the period from 2020 to 2023 in the following slides. Here we're focusing on the period 2022 to early 2023. It contains the daily gross margins as a percentage of net price. For a reference, I've added the key events to this chart. Again, we see the peak in the percentage margin during the first lockdown in the Netherlands. After the second Russian invasion of Ukraine, the percentage margin for diesel and Euro 95 start to diverge. In between these events, we see that the percentage margin is reasonably stable, around 45%. When we look at the gross margin in euros from 2006 to 2023, we see that this margin has been slowly increasing, but overall kept reasonably stable by the oil companies. Again, we see the peak at the beginning of the pandemic when the oil companies increased their margin to a, at that time, record level. As of 2021, we suddenly see a strong increase of the euro margins to new record highs, especially for diesel. This is a new pattern where the oil companies start following the oil prices immediately instead of following a stabilizing strategy. These are the monthly averages of the gross margin for 2020 to 2023. We see the increase during the COVID-19 pandemic to 40 euro cents per liter for diesel and to 31 cents per liter for Euro 95. Euro 95 peaks in March 2022 at 57 euro cents per liter and diesel in October 2020 at 70 euro cents per liter. We can also see that the oil companies have kept the margin for diesel higher than that for Euro 95. These increases in margins drove up the price at the pump because the taxes were either constant or they were actually lowered. The excise was lowered. Because the increases in margin drove up the fuel prices at the pump, both for consumers and for transportation, they added to the increase of the consumer price index. When the margins started to increase in around April 2021, they didn't have an immediate effect. But from September 2021, the CPI also started to increase. Fuel prices at the pump were steadily increasing due to the increase in oil price and the gross margin. In November 2022, after both Euro 95 and diesel had peaked, did the CPI descend from its 14.3% maximum. Thank you for watching this video by Zeno Analytics. My name is Jaap Vink. You can find more information on zenoanalytics.com. And again, thank you. When you want more information and more materials on data-driven decision making, please subscribe to the Zeno Analytics YouTube channel. Thank you.